And let's take a closer look at the markets now with Gunjan Banerji, markets reporter at the Wall Street Journal and CNBC contributor. Gunjan, I just need you to explain to everyone how you view what you call a recession trade. And it's interesting and it's nuanced, but it actually, it's like technology stocks do better. I guess because if a recession's coming, rates don't keep going up, multiples don't contract, and people run to the growth that's still left with the innovators that may have left some of the other, I don't know, companies that do boring things, staples, things like that are hurt in a recession. Is that what a recession trade is?
That's right, Joe. And I think that's what the recession trade over the past few years during the COVID-19 pandemic has evolved to be, where in times of stress, people are piling into treasuries. We've seen that lately. People are piling into gold. Gold prices recently hit the highest levels in around a year. And people have piled into the NASDAQ, anticipating those lower interest rates. And we've seen investors dramatically reprice the chances of a Fed rate cut later this year. And I think that shows you that people are betting on a downturn later this year. And that's just escalated during the recent banking crisis. I think the challenge is when we look at a lot of this economic data, whether it's the recent jobs figures, recent inflation figures, and even our personal lives. You know, I was trying to book a trip to Maine recently and hotels were just booked solid. We just don't see a lot of signs that the downturn is here yet. So that really ups the ante for some of the figures that we'll see this Friday with the price data and the jobs figures next week.
So there had been a pause in that trade. So we had seen it, you described it, it had been for the last couple of years, but until the recent tumult in the financial sector, that wasn't a trade, but now it's returned. And do you think this is going to last this time, or have we already stemmed the banking crisis?
I mean, that's really the crux of it, isn't it, Joe? Think about last year when people were positioning for cyclicals. Everyone going into 2023 was saying, we think, you know, bond prices are going to continue to fall. We think yields will continue to rise. You saw a lot of people positioning for cyclicals to rally. And, you know, we're just a few days away from the end of this quarter, and that has not panned out at all. And, you know, one word of caution for investors is that this trade has returned from time to time. Thinking of last summer when we saw tech rally, we saw bond yields drop dramatically, but it did prove to be short-lived. So I think the big question is, how much longer does this last? And does the inflation print on Friday lead investors to say, hey, we think the Fed is going to keep raising interest rates, not cutting them because of this inflation problem that's still sticking around a lot longer than many people expected?
We haven't been talking about waiting. In fact, I remember when we said, well, it was about 3-4 weeks ago, we're asking Leisman, well, when are the next really important inflation numbers? And we talked about it. But in the meanwhile, we had, you know, Signature Bank, Silicon Valley Bank shares. But there is a big inflation number coming on Friday. If that's hot, I don't know how you set yourself up for that. That you're kind of getting it hit. Those are two opposing forces that are hitting traders right now. If inflation is hot and we still have, you know, some trouble in the banking sector, you do the opposite things, I think.
Exactly. And I think everyone's kind of on the lookout for, is there going to be another shoe to drop? You know, this banking crisis, I just want to remind viewers, it's only been a few weeks. This could take a lot longer to play out. And one thing that's remarkable is just how quickly Silicon Valley Bank and Signature Bank went from flying high to shareholders were wiped out. They started trading in the over-the-counter market yesterday at under $1 a share apiece. So things are moving. You know, those two stocks went from really high to really low in a very short period of time. And I think that's left traders kind of in a limbo. And we saw that yesterday where trading volumes in the stock market hit the lowest level since 2022. And I think that tells you some people are just afraid of taking big risks right now while this all played out because of those opposing forces you mentioned, Joe.